Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Good to have you with us here at ausbiz. Well, global stocks are mostly lower overnight, while commodities fell heavily. US equities dropped along with bond yields and the dollar on weaker than expected US economic growth in the first quarter, which came in at an annualised rate of 1.3%. Wall Street sentiment was also affected by earnings misses. Salesforce shares plunged a day after the company's forecast second quarter profit and revenue below analyst estimates, as it reported weak client spending on its cloud and enterprise business products. Shares in department store chain Kohl's slumped after cutting its annual sales and profit forecasts, whereas shares in retailer Best Buy jumped after it beat forecasts for quarterly profit. Department store owner Nordstrom fell after the bell as it reaffirmed its comparable sales forecast. And shares of apparel retailer Gap surged more than 20% in extended trade, with it forecasting annual sales to be up slightly from the last year. Meanwhile, Dell Technologies shares initially plunged ahead of its quarterly results, which came in after the close. HP shares surged after posting better than expected second quarter revenue, which is seen as a sign of recovery in the PC market as customers upgrade their systems. And Tesla rose on reports that it's preparing to register its full self-driving software in China. Well, the US economy grew more slowly in the March quarter than previously estimated, with GDP growing at an annualised rate of 1.3%, compared with 3.4% in the previous quarter. Consumer spending growth was revised down by half a percentage point to 2%, and a measure of inflation during the quarter was also revised down to 3.3% from 3.4%. In other signs of a slowing economy, home purchases fell by the most in 3 years last month, and last week US jobless claims rose to a seasonally adjusted 219,000. The market interpreted the data as keeping the Fed on track to cut interest rates later this year. The Treasury yields fell, with 2-year down at 4.93% and the 10-year falling to 4.55%. And the US dollar fell against most major currencies, the Aussie trading at 66.3 US cents. And the outcome of this year's US presidential election just became more uncertain, with Donald Trump becoming the first president to be convicted of a crime. A jury found him guilty of falsifying documents to cover up hush money paid to a porn star ahead of the 2016 election. He faces sentencing on the 11th of July with the prospect of a fine or jail. Well, for more on the overnight session and more broadly what we're seeing with the US market at the moment, I caught up with Brad Gasworth from Unearthing Opportunities.
You're looking right now, there has been a little bit of a cross current in terms of economic data. That being said, most of these AI related companies are still putting up very, very big numbers. And you're also seeing companies benefiting from enhanced and better financials driven by some of the improvements by artificial intelligence in a more streamlined process. So, I think ultimately you're going to see maybe a little bit more of a ho-hum summer timeframe in terms of economic data. But in terms of consumer spending, we're still seeing a decent spend. You're seeing price conscious at the low end for sure. And you got some of the retailers reporting that, even with some of the better overall numbers. But that being said, I still expect the market to be resilient here. I still expect AI-related companies like a NVIDIA, a Google, Amazon to lead the way higher. And it's a narrow market, but I still expect positive things for the next few months.
Well, Brad, you mentioned NVIDIA. Of course, that's been the big one. What we should take out from that, it's done it again. It continues to come up with a beat. Does that continue? What sort of growth are you seeing there?
Yeah, Andrew, I mean, really a great question and really on most investors' minds. I mean, this stock has been almost parabolic. If you recall, 2 quarters ago when people were the naysayers saying that valuation got ahead of itself, I continue to expect the stock to make new highs, and we have seen that play out over the last few quarters. So NVIDIA, while valuation, I say this almost every time on your program, a valuation is never a reason to buy or sell a stock. You have to see if it's cheap on the way, on the way down or on the way up. But at the end of the day, the company is continuing to outperform on the financial results. And, that's a reason to be bullish on the company. If you look at AI, we're still in the early innings, and they make basically the chips that power artificial intelligence. So NVIDIA is still going to continue to do quite well. That 10-for-1 stock split, that's incredibly bullish for the company as well. I mean, you get a nice split here. That's typically good for stocks also. So typically when you have this type of 10-for-1 split, you usually see a positive result after, and I think you'll continue to see it. But it's in the right space. We're still in the early innings, and I expect the financials to continue to look good for several quarters.
Now, Brad, continuing with the AI theme, Alphabet launching some AI-powered search enhancements.
Yeah, so I mean, we're seeing a lot of improvements across the board. If it's Alphabet with what they're doing on search, if it's Microsoft enhancing their AI platform, that's really the theme, and it's no surprise and it's not new. But that being said, the enhancements that these companies are making are quite important. And Alphabet has been a little bit concerned given ChatGPT and the amount of people using that service for search over some of the old Alphabet Google search engine. So that's something that we're paying very close attention to. I don't expect this to have any major impact to Google's financials in the near term. It's something, again, we're watching, but Alphabet is in a very good spot. Their YouTube divisions continue to excel. There's still a lot of upside on advertising revenue that they can get. And we're still seeing that company execute on all cylinders. But yeah, you're absolutely right, Andrew. It's something very important to pay attention to, and we are.
Brad, what expectations do you have with Apple integrating AI capability into its devices? This, of course, comes ahead of the Worldwide Developers Conference, where some product launches are expected. A lot of people getting very bullish about this. What are you looking for?
Yeah, so I think you're going to see the typical upgrades, which we see. But in terms of getting AI-powered devices or more artificial intelligence into devices, this is a matter of when, not if. If you look at Samsung, they already have their AI intelligence in their latest S24 Ultra. I actually use that device on a daily basis, and it's quite impressive. But I expect this. This shouldn't be too much of a surprise from the investment community. I think it's important to see how they integrate their capabilities. But ultimately, you're going to see this across the board from not only Apple, but all the other Android device makers. It's the way the world is moving. And if you're not integrating AI, then there's going to be something wrong. And we're seeing, WhatsApp obviously integrated, had a good AI application installed. You're seeing really the major companies doing this. So not a surprise on the Apple front. I think we're just going to see basic upgrades. But ultimately, I think when you look at this year's iPhone, I don't think there's going to be that many exciting increases in the components and in the offering. But ultimately, there's a big install base that's going to do well. And I've mentioned on Apple as a large cap or mega cap stock, they're performing quite well. My only concern is their China exposure. And to me, I'd rather be long other large cap in the space.
All right, yeah, interesting point, particularly in terms of its exposure in China or growth there that has been, obviously had some issues of late. Brad, elsewhere, when we look at the original Mag 7, Amazon, well, it continues to grow with acquisitions.
Yeah, I mean, we're seeing a lot. I mean, on the logistics side, they're doing some interesting things on the marketplace, on AWS, Amazon. If you're a large cap or growth portfolio manager or an investor looking at large cap growth stocks, you have to have Amazon in your portfolio. Now, there's a lot of concerns at what will happen as the company gets too big, but that's a question on many of these companies now in the Fantastic 10 that we're looking at. Amazon, if you look at the sum of the parts and break up the company, it's worth even more than where it's currently trading. I'm not worried from a large cap perspective if government does do something in the future. I think that's actually positive, given, again, the sum of the parts is greater. But they're executing incredibly well. AWS has a significant lead. They're doing great things there. And the logistics side, they're just killing it. Now, there's some futuristic things that they're working on that are exciting, but ultimately right now, they're really executing on all cylinders.
And Brad, what are you watching for with Tesla? Reports that it's preparing to register its full self-driving software in China. Meanwhile, also with a presence in India of establishing manufacturing and R&D facilities.
Yeah, so Tesla, there's a lot of interest on what's happening with Musk and what will happen, going forward. Looking at the stock, I always I like their technology. I think they have an interesting lead on the EV space. That being said, I think there's a lot of cross currents and some headwinds that they're going to face. One, I think that the growth that we saw in production has really exceeded the growth on the service side. So people who have bought these Teslas are having issues with maintenance, having delays for 3, 4, 5 months out. I think that's going to have more of a negative impact from a consumer perspective. I think if you look at the overall lead in EV, almost every major car manufacturer now has very capable EVs that compete, and I think those cars actually have more bells and whistles than the old the Teslas do. So looking at the manufacturing, yeah, it makes a lot of sense that they ship to India. Musk recently had some positive things to say on the Chinese market because they want to continue to get some benefit and growth from China. But ultimately, I mean, the Chinese EV market is very strong. Tesla, while it has a good brand name, there's a lot of competitors in that space that's going to put pressure on growth from that segment.
Just before we finish, Brad, did you have a chance to look at those Salesforce numbers? I mean, that's certainly weighed on the market today. What did you make of that?
Yeah, I mean, look, it was the first time, Andrew, and it was a really great question because it's the first time in I think since 2006, if I'm correct, that they missed on the revenue side. That's a pretty interesting point. Now they've executed incredibly well. Now I don't. If you look at growth, the growth is still quite substantial. So the numbers are moving up to the right. What I think happened is Wall Street got ahead of itself with modeling and didn't really look at and try to be a little bit too aggressive on the growth rates. But growth is still up and to the right. It's just they missed where Wall Street was at. Now the stock took a beating from that. I think that dip is a good buying opportunity. I think you'll see a lot of people defending the stock in the weeks to come. I think it won't be very long lived, and I think they're going to continue to perform well. Now, if you're owning it, I still think it's going to be quite it's going to perform well. It's in the right space, and they're doing very good things with the artificial intelligence. It's really a miss on the Wall Street side, but again, it's an interesting point, something we have to pay attention to. It's the first one since 2006.
Brad Gasworth from Unearthing Opportunities. Let's just check where we're likely to get going in a couple of minutes' time with the Open. SPI futures looking very positive, up around 2/3%. Stay with us because the Open is just a couple of minutes away.